Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies SoFi stock. In this video, we're going to be going over the best reasons to buy SoFi, their future share price targets that analysts and professionals have given us, as well as their upcoming catalysts and news updates. So for more videos on SoFi Technologies, or if you own SoFi, don't forget to go and annihilate that like button. Go ahead, press it right now, subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube, especially if you want more videos just like this one. And with all of that being said, let's jump right into today's stories. SoFi Technologies, as you probably already know, is a fintech company or a financial technology company that essentially operates as a digital bank. SoFi is an online personal finance company that focuses on serving college students, millennials, and Gen-Xers because they have a platform that is completely digital and online. There's no need to go to brick and mortar stores or go to a bank in person. You can get any of their financial services or products completely digitally. And we also know that as they dive into digital banking, insurance, and investing services, this is putting a large hurt on traditional legacy banks, such as JP Morgan, Bank of America, and other large banking institutions. For me, two of my favorite digital banks would be Ally Financial or Ally Bank, as well as SoFi Technologies. I love their business models, and I think that the future of these companies are very bright, especially as we see these legacy banks trying to compete with these newer fintech companies by becoming more digital. But let's talk about why SoFi Technologies actually differentiates themselves from other legacy banks and other fintech companies. First, let's talk about how the company is licensed to have FDIC Insurance for their digital bank, and this would be in regards for people's deposits. They also offer checking accounts, business services, credit cards, personal loans, and mortgages. They also refinance student loans as well as offer insurance services and products including life insurance, home insurance, auto insurance, and they do this through various providers including Lemonade, ticker symbol LMND. And if you recall, Lemonade was a huge stock back in the day which surged, and now it has crashed very dramatically, but some investors believe that this company could also make a comeback. In the meantime, let's finish talking about SoFi Technologies and how they offer investment services and wealth management services, which would include commission-free stock trading, ETFs, which are exchange-traded funds, early access to IPOs, as well as cryptocurrency trading. Many banks do not offer this. They do not offer cryptocurrency trading on their own platform. On top of all of this, SoFi Technologies also offers individual retirement accounts, also known as IRAs. And they also have retirement planning, as well as robo-advisors, as well as human advisors, which are certified financial planners, also known as CFPs. That means SoFi Technologies is truly a one-stop shop for personal financial needs, and it has an all-in-one inclusive platform where you can get access to any of these services all from their mobile app. This is something that other fintech companies just can't compete with. Now, let's talk about their growth story. Back in the day, the company received multiple downgrades in the month of May by a very prestigious institution named Wedbush, where they dropped their rating to an underperform rating and they lowered their share price target for this company down to just $2.50. Now, since then, we have seen very solid earnings results as well as revenue growth, on top of the fact that this company is currently on track to become GAAP profitable by Q4 of 2023, which is the quarter that we are currently in right now. This is why the company is currently trading at around $6.80, and the company is still ushering in a new generation of consumers who are becoming acclimated to digital banking. On top of that, the people and the types of investors and consumers that they attract are very prestigious. For instance, the average SoFi consumer makes around $112,000 and a FICO score, which is their credit score, of 743, which means their consumers are very low risk and high reward. They also target young high earners. So a lot of these consumers are young, which would include people that are aged 30 and below, meaning that they are going to make a lot more money as they continuously age and develop their overall careers, which is not only going to grow their investments and their net worth, but also it's going to help SoFi grow their overall products and services. So the customers that SoFi has are top tier consumers, which are not risky because when these types of people take out loans or personal loans or refinance, they are going to pay back their debts. But now let's talk about the company's overall foundations. Let's talk about their total revenues. Well, their total revenues rose by around 34.6% year over year, up to $564.2 million, which was a huge increase from what they were projected to bring in. The projection was that they were only supposed to bring in around $511.3 million, according to analysts' estimates. But by bringing in $564 million rather than $511 million, this shows that SoFi Technologies is beating expectations consecutively quarter over quarter. But that's not all, because not only did their total revenues increase, their net revenues rose by 27% year over year, up to $531 million, thanks to 717,000 more new members just for the quarter, meaning that they now have a total of 6.9 million members. This also allowed the company to sell products and services to where the company had 1,047,000 new product ads, which represents a growth of 45% year over year to more than 10.4 million total products and services. Plus, we also saw deposits grow for their overall checking accounts and savings accounts by 23%, meaning they added $2.9 billion of deposits over the most recent quarter, attributing to their total of $15.7 billion worth of deposits, which is awesome. SoFi Technologies consistently raises the bar for what they can achieve financially, and that's why they raised their overall full year guidance for 2023. For the entire year, they were only projected to bring in $1.974 billion, but that then increased up to $2.065 billion, on top of them becoming GAAP profitable in quarter 4 of 2023, according to current metrics. Although that GAAP profitability has not shown up in earnings yet, I anticipate that for quarter 4, they will be profitable, which is such good news for this company. I also want to quote directly from this article regarding their CEO insights, because if you didn't know, their CEO has been buying shares of this company on a very regular basis, meaning that he believes the company's current share price is far lower than what the company could be worth in the future. So let's see what he has to say about his own company regarding their financials and overall fundamentals. The article says that SoFi's CEO, Anthony Noto, presented some impressive metrics for the quarter. Over 77% of adjusted net revenue in the lending segment was net interest income. It grew 90% year over year to $265 million. Net interest income is 2 times greater than its expenses. Their segment contribution margin rose 300 basis points sequentially to 60%. Student loan originations saw their highest originations since quarter 1 of 2022 ahead of repayments. Home loan originations rose by 64% year over year, despite high interest rates for purchase and refinancing. So, despite high interest rates, we still see people taking out mortgages to buy homes, we see people refinancing their student loans due to higher interest rates, and we are seeing that their net revenue is increasing due to these things. We also saw a 65% increase in their loans that were funded by deposits. Their lending capacity is also robust, with over $27 billion worth of capacity, which includes $15.7 billion worth of deposits, $3 billion worth of equity capital, and $8.4 billion worth of warehouse capacity. The company has expanded its buy now, pay later offering, enabling lenders to provide it as working capital loans to small businesses. Essentially, despite a hard macroeconomic environment right now due to high interest rates, SoFi Technologies is still beating estimates and projections despite economic macro volatility. So although you would think initially that high interest rates would decrease the demand for all of these products that we just mentioned, that is just not the case. SoFi Technologies is so strong and so resilient that they are still attracting customers and people are still buying into their products despite these high interest rates, which just shows how effective SoFi Technologies marketing has been for their overall business segment. And on top of that, their business model, which is a flywheel business model where they can cross-sell and upsell their current customers on more expensive and other products, is working phenomenally. A key part of SoFi's strategy is to promote synergies of cross-buying of products through their platform. If you came in only to refinance your student loans or perhaps get a mortgage, the company's also going to say, hey, since you already have a product with us, let's get you a credit card or sign you up for a checking account and a savings account so we can centralize all of your money just with us so you don't have to use any other banks because we have everything that you could possibly need, and we'll give you a discount because you're already already a member with us. And I think that is a phenomenal strategy for not only keeping consumers and members, but also keeping people happy. We also know that they have a huge competitive advantage in terms of FDIC insurance. And what does that mean? Essentially, FDIC insurance goes up to around $250,000, which means that if something were to happen and a bank that you had all your money in, up to $250,000, goes under and out of business, you will be owed that money through insurance. So you won't technically lose any money. You will get that money paid back to you, even if the bank that you had your money in failed. But SoFi is different because they have FDIC insurance that goes up to $2 million, and here's how they do it. The company has nearly 98% of their deposits insured through their FDIC insurance, and this is because the company launched its expanded FDIC insurance, which goes up to $2 million as of Q1 of 2023. But how could they possibly do this when FDIC insurance only goes up to $250,000? And why aren't other banks doing this? Well, here's what they can do. This is done by sweeping deposits into 8 different banks overnight and collecting the $250,000 worth of FDIC insurance from each bank. Thereby, when we add all of this up, it adds to a total of $2 million worth of insured protection. And I think this is a mind-blowing strategy that SoFi Technologies is utilizing. We also have analysts chiming in on this stock, to where a Morgan Stanley analyst recently made a bold claim that SoFi Technologies will increase in their overall share price over the next 12 months, and this analyst upgraded them to an equal weight rating from the original underweight rating. The analyst was very positive, and he sees net interest income rise further than expected on loan growth and higher student loan origination, so this is absolutely phenomenal news. Currently, the company trades for around $6.80, while the most positive bullish analysts believe this company could achieve a share price between $14 and $15 over the next 12 months. However, like we said earlier, there are analysts who believe this company could fall as low as $2.50 or $3 on the low end. So it's going to be up to you to decide what you think about this company. When looking at their overall stock chart, we do see support levels, to where their next support level is around $6.68, and if it falls below that, we have another one at $6.10, and then yet another one at $5.59. Now, normally, the share price is very stable at these levels, and it's very difficult for the company to break down or break through these support levels. So ideally, if you could get this company for below $5.59, that is very ideal. That is a good position to be in, considering the long-term growth trajectory of this overall company. But the main thing that investors want to look for is that this company is going to be GAAP profitable going forward as of Q4 of 2023. But let me give you a final word of caution. If they do not bring in GAAP profits in the fourth quarter of 2023, we could see the share price dropping between $4 to $5. Yes, it would be that dramatic, because management has been feeding this overall projection for quite a while now, well over a year, that they will become GAAP profitable. And if they miss that expectation, it could be catastrophic for their overall share price. On top of that, sometimes investors are just irrational, and the market operates irrationally, to where even if they do bring in GAAP profits, the share price could fall. But overall, I don't think that is going to happen. It seems that they are going to have a phenomenal Q4 earnings report, and I do believe they will achieve GAAP profitability, which is going to be your last opportunity to get shares cheap before they become GAAP profitable. So for more videos on SoFi Technologies, don't forget to go and annihilate that like button right now, subscribe if you are new, comment down below your personal price prediction for this company over the next 12 months, and don't forget to become a member of this channel for as little as 99 cents, because it helps me out a ton, and that's what keeps me here on YouTube. With all of that being said, I wish you the best of luck, and I'll see you in the next YT video.